Welcome to the deep dive. We've pored over the sources, we've synthesized the market intelligence, and we are ready to shortcut you to the absolute core of what matters in finance right now.
Today, we're diving into the regional banking sector and specifically a major M&A deal that really feels like a blueprint for where the industry is heading.
That's right. The news broke on January 7, 2026. National Bank Holdings Corporation, that's NBHC, has officially completed its acquisition of Vista Bank shares and Vista Bank.
And this isn't just another merger. It's a really significant strategic move. It's designed to solve what is probably the single biggest problem facing banks today.
So let's get the big picture numbers out of the way first. Immediately after closing, this new combined company has about $12.6 billion in pro forma assets.
And $10.7 billion in pro forma deposits. That's all based on financials from, I believe, late 2025.
And the total price tag for this whole strategic realignment, it came in at roughly $377.4 million.
But here's the part that I find fascinating, the part that, it tells you exactly where the value is.
The branding.
The branding. NBHC is immediately starting to adopt the name they just bought, Vista Bank in Texas. And they're planning to roll that out across the entire company later this year.
Wait, so the buyer is taking the seller's name?
Exact.
That's not a normal acquisition. That tells you this isn't about just absorbing a smaller player. It's a full pivot to a new identity.
An identity centered on what Vista was good at. And they're carving out one specific piece, right? The Bank of Jackson Hole Trust business is being excluded from the rebrand.
Which, again, signals that they see that as a very distinct high-margin asset.
Yeah.
It stands on its own.
Absolutely.
Okay, let's unpack this. Let's see what really motivated this deal and what it tells us about the rest of the banking world. So, the structure. You said they paid up.
Oh, they certainly did. It was structured as a mix of stock and cash. Vista shareholders got 3.1161 shares of NBHC Class A common stock, and then $31.62 in cash for every share they own.
And the total cash component was about what?
Came out to around $84.8 million.
So the stock part means Vista's shareholders still have skin in the game.
Huh.
They'll own about, 16% of the new combined company?
Yeah, on a fully diluted basis. But the number that really jumps off the page, the one that shows you just how much NBHC wanted this deal, is the premium.
Okay, what was it?
152%.
Wow.
152% premium over Vista's book value. I mean, that is not a bargain purchase. That's paying top dollar for something you can't build yourself.
152%. For our listeners trying to wrap their head around that, what justifies a number like that? Is it just the deposits? Or is it talent, geography, all of it?
It's all three. But the financial projections show that they're confident they can make it work. They're expecting an initial hit, of course, 7.8% dilution to their tangible book value, their TBV.
Which is pretty significant.
It is, but they project the earn back period on that will be exceptionally fast, something like 3 years.
And that 3-year earn back, that's the metric. That's what investors will be watching to see if this premium price is worth it.
It's the whole ball game. And their forward targets are really strong. They're projecting a return on average tangible common equity, or OATCE, of around 15.4%.
And their return on average assets.
Targeted at about 1.3%. So this is clearly a play for scale, for efficiency, and ultimately for driving up those shareholder returns.
Okay, so that brings us right to the strategic core of this deal, which, as we've been seeing for the last year, is all about one thing.
Deposits.
Deposits.
Exactly. The primary driver here, they were explicit about it, was adding a low-cost deposit base. Forget chasing loans. Low-cost deposits are the new gold standard.
And we've seen this in survey after survey. Deposit costs are the #1 profitability challenge for 61% of bank leaders. It's a huge pain point.
A massive one. And it's completely changed M&A priorities. You have 41% of executives now saying that adding a low-cost deposit base is their primary reason to do a deal.
And that's up from just 29% a year ago.
It's a huge jump. Banks are effectively out there buying cheap, stable funding.
And Vista, with its footprint and its relationship model, was the perfect target. It plugs NBHC directly into Texas.
Which is the third largest state by deposits. It just turbocharges their growth strategy there.
And we're talking about prime markets, Dallas-Fort Worth, Austin, Lubbock.
And they get a foothold in Palm Beach, Florida, too. But just look at Texas alone. The 5-year projected population growth there is more than double the national average. They're buying into a demographic tidal wave.
Right. They're buying a foundation for future volume, for future economic activity.
But it's more than just geography, isn't it? They're buying talent. What about the synergies?
Well, NBHC is focused on two big things. First, just leveraging their own liquidity in Texas to grow commercial loans. But second, and I think this is the bigger piece.
The wealth management side.
Exactly. They get to introduce their NBH Trust and Wealth Services to Vista's really engaged private client network.
And they're keeping the leadership that built that network. John Steinmetz, who is the CEO of Vista, is staying on to lead the Texas market and take on other senior roles, which is so important. It shows they value that institutional knowledge. They know they need him and his team to actually make this strategy work.
And then there's another really interesting niche play here, right? In Colorado.
Yeah, this is a fascinating little detail. The Vista team is also going to be in charge of growing private banking in Colorado's resort towns. We're talking Aspen, Telluride, Vail.
So they're using the talent they just acquired in Texas to boost a high net worth segment in a completely different state.
That's the plan. They're going to leverage their existing Bank of Jackson Hole Trust franchise and use this new expertise to go after those really sticky, high-value deposit accounts that come with managing wealth in those super exclusive areas.
So it's scale in Texas and specialized high-margin growth elsewhere.
It's a very clever two-pronged attack.
Which leads us perfectly into the broader context. This deal isn't happening in a vacuum. It's a perfect example of what the M&A market is doing right now.
I mean, if you connect the dots, this deal is just proof of the trend. When you're facing high deposit costs, M&A is just the most efficient way to get scale and get your hands on a good deposit franchise.
So buyers are getting more aggressive? We just talked about 152% premium. Is that becoming the new normal?
Buyers are definitely willing to pay more. The latest surveys show that 37% of banks were interested in being acquired in 2024 or 2025. That's way up. And the buyers are chasing them.
So what are they willing to pay?
44% of buyers said they'd pay up to 1.5 times tangible book value. And, a full 20% said they'd go up to 1.75 times.
And that pretty much matches the median price paid in 2025, which was 150% of tangible common equity.
Right. Pricing expectations are just rising because the value of that stable funding has gone through the roof.
So if buyers are willing to pay, what are the roadblocks? What's stopping even more M&A from happening?
It's exactly what you'd expect in a seller's market. 74% of buyers say pricing expectations from the sellers are too high, and 71% say there's just a lack of good targets out there.
So a finite number of good banks with great deposit bases.
Exactly.
What about the regulatory side? That always used to be a huge drag on these deals.
It's changing faster than people think. Most banks, about 81%, said the pace of approvals in 2025 didn't really impact their strategy. But the actual data is stunning.
How so?
The time it took to get a deal done dropped to just 4 months on average.
4 months? For a bank merger, that's light speed.
It's the shortest time since at least 1990, and that speed matters. If approvals get even faster, 16% of banks say they'd become more aggressive buyers, and 18% will be more likely to sell.
So the regulatory environment is actually becoming an accelerator, not a brake.
It seems that way, yeah.
Okay, so NBHC makes this really kindly, really aggressive move. Let's look at the foundation they're building on. What did they look like financially before this deal?
They were coming from a position of real strength, which is what you need to do a deal like this. As of Q3 2025, their common equity tier 1 ratio, a core measure of their capital buffer, was at 14.69%.
For listeners who don't track this stuff every day, how strong is 14.69%?
That is very robust, well above what regulators require. It gives them a ton of flexibility. Their net interest margin was also healthy at 3.98%. So they were managing their costs and earnings efficiently.
And the loan portfolio, what's the risk profile there?
It's highly diversified. Commercial and industrial lending plus owner-occupied commercial real estate is about 61% of the total. But crucially, their exposure to non-owner-occupied CRE.
The segment everyone worries about.
Right. That sits at only 132% of risk-based capital, which is way below the concentration guidelines. So they're positioned very defensively.
So they have the capital, they have the credit discipline. Now let's talk about the tech. This is what makes this a bit of a masterclass, right? The platforms they're bringing to the new company.
This is their secret sauce, I think. This is where they're different. They launched an innovation platform back in July 2025 called Unify.
And this is more than just online banking.
Oh, much more. It's an entire ecosystem for small and medium businesses. It's about helping them build capital.
Walk me through that. How does an app help an SMB build capital other than just lending?
It's about becoming their partner. It has tools for cash flow management, digital security services, things these small businesses really struggle with. By providing that, the bank becomes indispensable. It locks in their accounts, it locks in their sticky deposits.
It's an aggressive move into that whole SMB fintech space.
Very aggressive. And then they have another platform, Canberra, that's just focused on gathering deposits.
How does that one work?
It's a deposit administration platform that uses embedded finance. Think of it as a low overhead, almost indirect way to get new funding streams.
So through partnerships with other fintechs.
Exactly. It gives them funding flexibility, and it generates income that isn't directly tied to their own balance sheet. It's a really clever way to compete against rising deposit costs without building tons of new branches.
So this whole merger is really the perfect template for a modern regional bank strategy.
I think so. You aggressively buy a high-quality deposit base in a high-growth market, you fund it with a fortress balance sheet, and then you use that new scale to accelerate your specialized services and your tech platforms.
That's the roadmap. Okay, to summarize the full picture here, the NBHC Vista merger is just a prime example of strategic M&A. It's prioritizing growth markets, those desirable deposits, and then scaling tech like to Unify and Canberra to capture that long-term value.
Couldn't have said it better myself.
Which brings us to our final provocative thought for you to chew on. We've seen that M&A is heating up, and the focus is shifting hard toward deposits and fee income from things like wealth management. Given that hyper-focus we talked about on resort markets, Aspen, Vail, Telluride, it raises a question. In a world where deposit costs are the biggest problem, how much more value will be placed on these niche, high-quality, non-interest-bearing deposit books in the next wave of deals? I mean, are we going to see banks paying 200% of book value just to get into the right ZIP codes?
The stickier the cash, the higher the multiple. I think that's where we're headed. The market is assigning enormous value to just having proprietary access to wealthy clients.
It's a question that could completely redefine bank valuation. And now let's move on to our quick dive into some pure, unadulterated speculation. This is not financial advice segment. The outrageous but plausible trade idea.
All right. Prepare for maximum risk and absolutely zero guarantees.
Okay, the thesis here is rooted directly in that niche strategy we just talked about. NBHC is leveraging Vista's private banking team and the Bank of Jackson Hole Trust Charter to aggressively go after growth in high net worth resort markets. Aspen, Vail, Telluride.
So they're targeting the owners of massive assets in those very specific places.
Right. They want to capture the liquidity event. So the trade. You purchase NBHC stock betting on this successful integration. But at the same time, you purchase call options on a high-end luxury real estate brokerage that operates exclusively in those Colorado mountain resorts.
So you're betting on a direct correlation. As the bank's private client push ramps up, local real estate velocity benefits.
The outrageous but plausible link is betting on the accelerated conversion of that real estate liquidity.
Yeah.
The sale of a mansion, the creation of a trust from inherited property, all that cash sitting around after selling a ski chalet into stable, low-cost trust deposits for the bank.
So if the bank is effectively targeting these high net worth homeowners, the institutions that help them transact on those homes should benefit in a sort of feedback loop.
Exactly.
Yeah.
It's a bet that the bank strategy is so effective it actually stimulates the local wealth ecosystem.
Plausible, maybe. Outrageous. Definitely.
And remember, this is purely illustrative and absolutely not financial advice.
Yeah.
You have to do your own homework. That's all the time we have for this deep dive. We hope you feel significantly more well-informed about the banking landscape and the rising value of a good deposit base. We'll catch you next time.